Welcome, everybody. Today we wanted to discuss the potential implications of the Ukraine-Russia conflict and war towards crypto assets. Basically, how is this linked? How is it not linked, and so on. For this, we're having a couple of very skilled speakers here. Maybe let's do a quick round to introduce everybody here. Who wants to get started? Frank, would you like to present yourself briefly and your company, and then we directly jump into the topic, and I will then also outline how we will structure this hour.
Yeah, cool. Thanks for having me. My name is Frank Wagner. I'm a co-founder, CEO of Invao Group. That's a digital asset manager based in Liechtenstein and other countries, including the Middle East. Today's talk is not about crypto asset management. That's fair enough, makes absolutely sense. I have a very personal relationship to Ukraine and Russia. So a long time ago, I used to study there. I have many friends in both countries. I'm shocked about everything I see on TV all day long. And this talk should not be about politics, about a war. I think we're all more or less on the same page here, but about the implications on crypto. And I'm reading.
Perfect. Yeah, thanks very much. And with this, let's move over to Valentin. Please also briefly present yourself briefly.
Hi everyone, my name is Valentin and I'm Executive Director at ITSA, where we're a Berlin-based non-profit working on the developing market standards for global token markets. My experience with crypto is going back to 5 years working on education, token analysis, and being part of also writing a book about crypto economics. So that's it from my side.
Perfect. Thanks much. And with this, let's move over to Seamus with also the ask and inquiry to please present yourself briefly.
Thanks, Philipp. Thanks for having me. So Seamus, Donoghue. I'm the VP of Strategic Alliances at Metaco. I'm based in Switzerland. Metaco is a global company headquartered in Switzerland that works primarily historically with tier one institutions to enable them to securely integrate, store, and manage crypto assets. And now we're delivering that to the broader market with a SaaS. So it's really about securely managing your entire digital stack, I suppose.
Perfect. Thanks. And finally, we have Alireza here. Please, Alireza, also present yourself and your background briefly.
Thank you, Philipp. Hello, everyone. It's Alireza here. I'm a German-based lawyer. I'm dealing with different aspects of the DLT and blockchain when it comes to regulation, and I'm advising clients on how to set up their business with DLT and crypto. But on top of that, I'm also familiar with sanctions law and sanctions compliance, since I'm also advising banks and institutions how to do business, for example, with sanctioned jurisdictions such as Iran. My personal background, I'm originally from Iran, plus my family now also is from Russia, so I have also nexus to Russia, so I understand different aspects in this scenario, and I have a good understanding on how maybe you could use crypto in such a situation, and some people say use it to bypass the sanctions, but we're going to talk about this, and I'm happy here to discuss this with you all.
Okay, great, thanks. That's the round. And in case you have questions, then you're also welcome to put them on the YouTube channel. We will then also read them, and then basically I will also post them to the audience. That's how we usually do it. With this, let's directly get started. How are we structuring this panel discussion? First of all, we would like to provide a little bit of context. How is crypto and Russia intertwined? You know, what happened here in the last couple of weeks and months. Then we would go to the topic around benefits of crypto here. That's the topics around donation, for example, moving money around, and so on and so forth. Then we talk about using crypto to evade rules, to basically not comply with sanctions. That's basically then another topic. And ultimately, at the end of this discussion, we would also highlight potential thoughts. You know, that's very, very speculative but potential thoughts on how the international world of finance could potentially change with reserves at central banks and so on and so forth. So with this, Valentin, I would like to ask you to get started. You apparently know quite much about what happened here. You also know the regulation in Russia with regard to crypto assets. There has been some disputes between the Ministry of Finance and the central bank whether to regulate crypto and so on. Please give us a little bit of insight what happened with regard to crypto in Russia, also previous to the invasion.
Yeah. So start off like giving an overview what happened, what was the status quo before the war, and then briefly touch on after the war starts. It's a fact, Russia is the third biggest Bitcoin miner in the world and still is. 70% of all ransomware attacks involving crypto come from Russia. Eastern Europe is also, according to chain analysis, one of the most active regions in dark markets when it comes to crypto, which involves Russia as well. And we have on the other side, Ukraine, which is in the top 5 countries in the world in terms of crypto adoption among their citizens. And going back to Russia, there was, before the war starts, the conflict between the Ministry of Finance and the central bank, where the Ministry of Finance was introducing bills to legalize crypto and make it more legal friendly. And on the other hand, the central bank was strongly against that. And it still is, but there has been some changes after the war starts. And then after it starts, we see different developments where Ukraine opens for crypto, it starts accepting donations, embraces crypto. And on the other hand, Russia, even crypto unfriendly. We saw recently, I think a few days ago, Sberbank got a license to issue crypto assets, which points probably to potential development in terms of central bank cryptocurrencies based on Hyperledger Fabric. So this is the brief overview, what's the status quo, what's happened, and then we can dive into the topics.
Okay, perfect. Anybody wants to add something here? Maybe Frank, you also have quite some touch points with Russia. What would you like to add here?
Well, my touch points with Russia are on a very personal basis. So these days, for me, it's a very personal thing because I have many friends in both countries. Yeah, that's more personal thing. Regarding crypto, we do not have business with Russia so far because for them it's very, very hard to get the money in a compliant way out of the country. That's not new. And we are a regulated crypto asset manager, a digital asset manager. So to do business with Russian people was really difficult before the invasion, and it's nearly impossible now. That's one thing. What I see, what I observe, we have an office in the UAE, in Dubai, that of course lots of Russian capital is going to the Gulf region. But also here we are not talking about crypto, we are talking about real estate, we are talking about other investments. So following, let's say, for example, Christine Lagarde, crypto is always related to crime. No, it's not. Only a very, very few portion of crime is related to crypto. That makes sense. And that's nothing new here. That's not related to the recent Russian and Ukrainian activities.
Perfect. Thanks very much. I think this also adds a little bit of background here. So to move on, where would you feel that crypto has benefits for the current situation? Yeah, who wants to basically give this question a little bit of a chance, in terms of donation, unstoppable money transfers, and so on?
I can jump in. So after the war starts, Ukraine starts accepting donations in crypto, and we see a huge influx on cryptocurrencies, people donating from all over the world. We have different initiatives. It's not only the state, we have also decentralized organizations organizing themselves to accept crypto and then spend it on charities in Ukraine. And we also saw some NFTs being sold, like the Ukrainian flag, for huge amounts of money, where they collected the money and using it also for charities. We saw in Ukraine also, it's the same in Russia, ATMs, you couldn't get foreign currency out of your ATM. So people started using more crypto to transfer it outside of the country if they're leaving the country. Yeah, that's a few points on the donation side in Ukraine.
Thanks, Valentin. Anybody wants to add something in terms of benefits for unstoppable transactions, storage of assets without custodians, and so on? Seamus, you're the custody expert. You have to take this.
Sure, thanks. Well, I mean, I just say, I think, without commenting on the politics, I think this has been, a fascinating use case that when, let's say, the country that's obviously on the receiving side of this unjustified aggression, I think, they see their financial system implode. How does a regular person on the street protect themselves? Same thing, in the domestic population of Russia, they may not support basically the actions that Putin's take, but the ruble's collapsed. How do they protect their earnings, basically? So I think you've seen use cases where you can insulate yourself from a fiat system that's collapsing, for whatever reason that is. And it's not just in cases of war. We've seen this in hyperinflation. This is in Turkey. The only centralized finance has this fatal flaw, basically. And the unstoppable finance, as you described it, is one of the refuges that you can basically take shelter in. Now, physical gold obviously is viewed also as a safe haven in that, but it's portable. If you're fleeing from a war, I think there's already been some observations on different news sources of certain officials leaving with bags of money and physical gold. It's problematic. Crypto solves that problem, or Bitcoin specifically solves that problem. It's completely portable and secure, and you can have all your assets saved there. I mean, it's volatile, but I think the volatility is nothing in comparison to losing all your assets.
Yeah, but Seamus, one follow-up question. This entire crisis, when, for example, financial infrastructure is getting weakened or maybe even destroyed and so on, then with this also custodians would basically get at risk of switched off or whatever. Wouldn't this be a case for self-custody, or is this still worse because then the normal user might have to remember like this very long password, which he can't, right? So how to balance, or what do you tell your friends, basically, not your customers, what do you tell your friends in terms of balancing self-custody and custody by third parties, if this question makes sense, right?
Well, I think the value proposition of crypto, I mean, there's no question, managing your own security is complex. I mean, you can see exactly this. If I had my seed back up in my apartment in Kiev and I had to flee, well, it's not going to do me very much good there, basically. So I think there's no question. I think there's a balance between using a custodian because it's easy. But I think what crypto delivers, it doesn't necessarily mean you always have to manage your keys, but you have options. So in the case of this instance, as you described, you would want to be able to exit a centralized custodian, particularly if they're based in a country like Ukraine, and move that onto your own secure wallet, basically, or your own secure device, for example, which is obviously small and portable. So to me, I think it's the optionality, which is the real beauty of crypto. You can have a custodian, but you can instantly transfer those assets to your own solution, whether that's held physically or offshore somewhere.
I think this makes very much sense, giving a little bit of light in here. Yeah, and if we talk a little bit more about now the bad points of all this conflict, talking about sanctions, maybe Alireza, you could give us a little bit of an lecture, let's call it that way, for a couple of minutes. How do these sanctions work operationally? Where are limitations to this, and where are they actually working effectively, or how does this entire approach with sanctions work? Maybe you can elaborate a little bit on this question.
Yes, sure, Philipp. So I also wanted to add, before talking about sanctions, one more side which we didn't touch on, the financial inclusion part. So the financial inclusion has, in this respect, different dimensions. One dimension is that if you look from the Ukrainian perspective, so those who flee now out of Ukraine, it is for them difficult to take their assets, their cash with them. And even if they would do that, Ukrainian money, you cannot really, for instance, in Germany or in a European jurisdiction, change it straight to euro. It is really difficult. Plus, one who is fleeing the country does not really have time to go to the ATM if it's working, cash out all the money and then flee the country. And this means in respect of crypto, if this person who's fleeing the country would have its assets on its wallet and would flee the country, then would have directly access to its cash and would then, in Germany, for instance, once arriving in Germany, cash out its cryptocurrency to fiat, and this would work out perfectly. So the other way around, we discussed it with respect to donations. It works putting money to or sending money to Ukraine, but also other way around. So for those who have fled the country and who are already in Germany or within the European Union and who need some cash coming from Ukraine, it is very difficult to do a transaction where the banks are not working any longer. And especially when you look at a cross-border payment from Ukraine to Germany, or let's say from Russia to Germany, you would need to have a clearing bank. So you would need to have a bank which is clearing let's say the Russian ruble to euro. And this is right now, when we talk about sanctions, this is not working. So we now have, for example, SWIFT, which is not a sanction. We have the exclusion of Russia from SWIFT, or the termination from Russian banks to the SWIFT. And the SWIFT is a messaging standard which connects the banks to each other, to network, and which gives the banks the possibility to communicate through messaging service. And when this SWIFT is not working, it means that a Russian bank cannot do a cross-border transaction from ruble to euro because it is not working any longer. And this is something where we now come talking about sanctions and trying to say bypassing the sanctions. If you look from the Russian perspective, some may argue and say, now when the banks are not able to transfer the money from Russia to Germany or to Europe, or you cannot transfer anymore from Russia outside of the country, you could do it with crypto, because crypto, Bitcoin or other Ethereum-based cryptocurrencies, they do not need SWIFT or some intermediary. You can do it peer-to-peer. And this is something where people say, okay, you can bypass the sanctions, which is, in nice words, nonsense. Because first of all, as I said, SWIFT is not a sanction. SWIFT is a messaging service. So bypassing the sanctions would mean, when we look about sanctions, we have sanctions on persons, like natural persons or companies, and we have sanctions on goods, so embargoes. And this apply on specific persons. It doesn't mean that anyone in Russia is sanctioned. It means that a specific list of natural persons and companies, they are sanctioned, which means that if we would receive money from them, our bank would need to do a sanctions list screening and check the originator, so the person who is sending the money to Germany, and check against the sanctioned list if this person is sanctioned, and then do a decision to accept the money income or to reject it. And this is what we call sanction screening. And when we talk about crypto, we can discuss it later on, but with crypto, you cannot really bypass such sanctions in an easy way.
Okay, I think this was very helpful because you try to disentangle sanctions and the exclusion from the SWIFT system, right? So how is your experience with regard to sanctions? Do they really work? Because Alireza, we talked separately about potential triangle trades, where you are not doing direct trades between the two blocks, let's call it that way, but you're using triangle countries to basically work around this. How does it work? And does it work, or is it not working?
I honestly believe the sanctions and also the termination of SWIFT, so the termination of SWIFT for Russia, does not really help in respect of trying to stop Russia from the invasion and stuff like that. This doesn't really help, because if you look really who it hits in the end of the day, it hits the normal people in Russia. So the normal people who have family members, let's say, or contacts in Europe and want to do a cross-border transaction, so they want to transfer money here, they cannot do it any longer because their bank is not connected anymore to SWIFT. And so it doesn't really help in that context. So those who it wants to hit, so those people who are listed, which are not that many, they can still do a transaction through a so-called triangle transaction. So they transfer the monies, let's say, to a banking account in Turkey, Istanbul, or to Dubai, the Emirates. And from there, they transfer it to Europe, or let's say to Germany. And this they can do quite easily. They do not need for that crypto. And a bank would not really realize it if they cannot see on the transaction where the money is coming from. And this is actually what they would usually do instead of taking their fiat money, transferring it to crypto, and then doing a crypto to crypto transaction, and then needing to cash it out again to fiat. This which doesn't really make sense.
So quickly to repeat, you see it as a possibility for those people who have the money, a little bit of power and so on, that these people could use such tactics like triangle trades and other ones to basically work around the sanctions, such that at the end of the day, to some degree at least, these sanctions are also hitting the normal population adversely, right? And what about crypto assets now, Alireza? You know, how do crypto assets fit in there? Would it be possible to use cryptocurrency to work around there? Because, you know, we have lots of politicians, journalists. We also have Christine Lagarde and other ones saying that this is basically a very, very, very big risk and needs to be immediately be scrutinized and so on and so forth. Is this true, or is basically the media around this a little bit larger than the true numbers?
I mean, we really need to be very careful here. We need to look at the facts. And if you look at the Financial Action Task Force, so the Financial Action Task Force is publishing information on anti-money laundering, on combating the finance of terrorism, and they have a so-called red flag report when it comes to crypto. And the Financial Action Task Force actually informed all the member states that yes, crypto may be risky. I'm not saying that crypto is not risky at all when it comes to anti-money laundering and combating the finance of terrorism. But these are coins which want to cover coins like, not like Bitcoin or Ethereum-based token, which are very transparent, which you can follow on Etherscan or whatever method. So it doesn't really work with such coins. It would work with other coins which are not transparent, but there are not that many used in that direction. So if you look really at the facts, so let's say at the publications of the Financial Action Task Force, it clearly says that using crypto for anti-money laundering in this cross-border context is not really something which is happening that much. And I do not think that it is going to happen much more only because now Russia or Russian people are sanctioned. I don't see that. It is too difficult to use crypto for trying to cover or trying to bypass the sanctions. There are much easier ways to do that. And this is actually something where I would say it's not true to say that you can use crypto to bypass the sanctions. We saw the same for the case of Iran. So some people were in the past years also afraid that Iran is using crypto to bypass the US sanctions or other sanctions. But in fact, there is a very small number of Iranians who use crypto to do a cross-border payment. And even if they do it, they would usually use Bitcoin. And with Bitcoin, you can very easily find out from where the money is coming from. And so there is not really, from a practical perspective and also from a legal perspective, a high risk in crypto to bypass sanctions.
That's a very interesting topic. And maybe, Frank, you want to add something on these privacy coins? We discussed this also previously.
Yeah, of course. First of all, we tend to talk too much about crypto and all the implications on the financial market, sanction and so on. We are in a very early market. We are in a very, very small asset class. We are talking about 2 or 3 trillion, not more. So talking about tariff finance, AML, or money laundering in this case, honestly, then let's talk about US dollars in cash. Yeah, makes much more sense. So, but of course, you can use the crypto world to bypass sanctions or just to get your money back. Yeah, talking about just all these people in Russia and Ukraine now having problems to access their money because their banks are sanctioned in Russia. It's the banks, not by the people. Then you can do this. Yeah, you can do a crypto transaction, and the chance that the destination bank will realize that it comes from Russia in whatever way is very, very low just because they don't get it, how it works. And if you want to hide something, then you have these coins like Zcash, like Monero and other ways, black pools. That's something you can do. And Zcash, for example, doubled the price since the beginning of the invasion. Yeah, of course, that's happening. But we are talking about a niche. Yeah, that's not a big thing. It will not change the sanction system. It will not change the world financial system. It will not end the war.
And maybe let me add, on the day of the war, it started, the Russian ruble Bitcoin pair jumped, and then it went back to normal like before the war. So there wasn't like a huge spike in trading on exchanges when it comes to crypto.
I would just jump in. I think Lagarde loves the negative headlines about the crypto market, and like Senator Warren in the U.S. equally introduced a bill talking about sanction evasion through crypto. I think emphasizing Frank's point, the market's too small. I mean, you even have Nellie Liang, who's basically the Treasury Undersecretary of Domestic Finance in the U.S. 2 days ago, saying at this point they just don't see that crypto could be used in a large-scale way to evade sanctions. I think in the discussion with Warren, I think it was Chain Analysis that was in an open discussion. They were talking about basically everything can be tracked. I mean, this is pretty transparent. I mean, you're talking about, it's like having marked notes. They're not usable. Basically, they can be fully. It's a transparent tracking system. So they know where those bills sit. They know where they'll be spent, and they can block that. So it's just not an effective tool. Cash remains the optimal way to do that. And even if you look at mixers, I mean, mixers, from what I understand, you can only mix about 30 million a day in these things. So. And from what I understand, there's also more progress there by the data analytics companies, the chain analytics companies, to basically map the inputs and outputs there. So it's a lot of hype. The reality is it's good for individuals, basically to protect them, insulate them, as we described earlier, insulate themselves from this sort of thing. But to do something on a nation scale evasion of sanctions, it's just a non-starter at this stage.
Yeah, this is an interesting point, and I think I would agree right now. I would perfectly agree, but I still think this needs to be monitored very closely, and it's okay to monitor this on behalf of the media and the politicians. This is perfectly fine, but it doesn't make sense to twist the numbers or expect things to be different than they are. Right? Anybody else wants to add something on this discussion? Because otherwise, I would like to ask you, talking about Chainalysis, they have produced a specific Oracle function where they are mapping sanctioned wallets, at least those which are known. Who of you guys would like to quickly explain this? Maybe Alireza, would you like to quickly explain what's going on there, or what the offer of Chainalysis is?
Yes, sure. So I touched on it a little bit when I said how you usually need to do sanctions compliance. Usually, if you are a bank, like a German or European-based bank, and you would get a payment coming from some jurisdiction which may be high risk, like Russia, or from a person which may be high risk, you would do a so-called sanctions list screening. So you would take a sanctions list, the European sanctions list, the United Nations sanctions list, and let's say the US sanctions list, the OFAC sanctions list, and you would screen the name of the person who's sending the money against the sanctions list. And this sanctions list, they have some flaws. Now we can see it with respect to Russia sanctions, that the sanctions list, like the providers of such tools, they have access to the list, but they may not be up to date, which means you have a list which may be from last year, maybe from last month, but you do not cover the most recent additions to the sanctions list. And with respect to US sanctions list, you hear it on the news on a daily basis that new names have been put on the list. So this means you have a high risk that you check manually the lists from money coming in on your account, and you have a so-called false negative, which means that the result shows you that the person is not sanctioned, but maybe in reality this person is sanctioned, but the list is not up to date. So now Chainalysis has provided a service which is very smart, because Chainalysis is leveraging the blockchain technology, in this case the Ethereum smart contract technology, so it actually only works with Ethereum movements, transactions, where they have put an Oracle, and you can use it free of charge, and you can use it with your system to have an automatic sanctions check, which means this Oracle has access to all sanctions list on a very accurate and up-to-date manner. So you see on up-to-date manner the newest sanctions, and you can screen it automatically every movement which is coming from an Ethereum-based wallet against the sanctions list. And the interesting part, as I said, it's free of charge. And I think this is a nice example to show that actually now with blockchain, it is not really negative when it comes to sanctions compliance. Here it is very positive because you can leverage the blockchain and smart contracts to do it in a very efficient and cheap, in this case, free manner.
Perfect. I will try to repeat it very briefly, and please let me know if I understood it correctly. So you have the list of sanctioned people, that's individuals. Somehow you have mapped this to wallet addresses. You know, there might also be flaws there because maybe some wallets are still not flagged, but still, you know, they try to map wallet addresses, for example, on Ethereum, to all these people on the list. And then they have created this kind of Oracle service where you can call this Oracle, where you can check whether a specific address is on this blacklist, so to say. And for example, you can use this Oracle function that once you would like to go have an outgoing transfer, then you can ask previously whether a specific address is on the blacklist, and then you would not take the transaction, right? That would be like a smart contract as it could be implemented easily. And the same, as you have said, is also possible that in case you are getting funds from a blacklisted address, you check this, and in case the address is blacklisted, then for example you send the money back or you notify somebody or whatever. Did I get this correctly?
Then
Yes,
you should inform the FIU when you get money from dirty sources. You should not send it back, Philipp.
Okay, no, I'm not doing this. So therefore, you are the practitioners here, Frank. You have to tell us what to do.
So we have a process with our company in Liechtenstein. So we are regulated in Liechtenstein. We work very close to the Financial Market Authority, of course, the FMA, and the FIU. And the FIU is kind of the FBI for finance. And whenever you see a suspicious transaction, and that's not limited to crypto, that's in the whole financial industry the case, you have to report that. And then they make kind of an investigation, and then they decide what to do. Being a service provider, a regulated service provider in the area, there are two things you should avoid, not three things you should avoid. First, make the transaction happen, send the money back, never do this, and tell the customer what is going on. That's a little bit tricky, especially for banks, because they say, oh, the transaction is blocked, and you are even not allowed to disclose the reason why the transaction is blocked. That's a little bit a tricky field, and the FIU is doing this. Yeah.
Interesting insight. And Frank, maybe a question back to you. The regulation as it has been established now, and as we might see it arise, you know, with MiCA regulation and other ones, do you feel that this regulation is good or bad? Because, you know, the original philosophy of crypto was to have peer-to-peer, to have decentral approaches, to, if possible, have self-storage, self-custody in a peer-to-peer manner, to not touch regulatory authorities, right? But as we have seen now, to some degree, regulation is needed. You know, what's your opinion? How to balance this?
So first of all, regulation is good, and the more, the better regulation, the more it will be helpful for the entire market. And I'm very optimistic. So I'm a big believer in Bitcoin and other crypto assets, just for a very, very simple reason, because it's the next revolution of digital, so the internet of value. So I'm a big believer in it, and from a regulator perspective, the earlier they come with a regulation, the better it will be. They will not avoid it anyways, but they should take care about taxation. Yeah? And taxation makes absolutely sense. I'm more than happy to pay taxes on it. And crypto is just made for transparency. So I would rather say, hey, please embrace it, use it, bring us a good regulation. And it's moving slowly. Yeah? It's moving, but it's moving slowly, including MiCA. You just mentioned that. Yeah, it will take some time. And then we have the ECB, and we have the different perspectives, and we have a lot of journalism. I don't know if they are evil or if they're dumb or both. Sorry, excuse my words. I'm not sure about this. It will take time. And so my answer is basically every 10 minutes another block, and we will see.
That's fine. Alireza, would you like to add something on the topic around regulation, or maybe Seamus?
Let me maybe just say 3 sentences, Philipp. So I'm very close to Frank, but I believe Frank would agree with me to say that regulation is good, but it has to be in risk-based approach manner, which means same risks, same rules. So I can give an example. There was in the last couple of weeks the suggestion to not allow any more proof of work coins, or not allow any more the proof of work coins to be used in the context of MiCA, which is, in my understanding, nonsense. And at the same time, there is still a suggestion to have a KYC rule for crypto transactions crossing $1,000, €1,000, which also doesn't make sense, only because it's crypto. So if you have a financial instrument, or if you have a MiCA crypto asset which has the same risk as a similar financial instrument, then I would say the same regulation should apply to each of these instruments. Doesn't matter from which technology is coming, if it's DLT based, blockchain based, or whatever. So then the same regulation should apply, and then regulation helps for developing and making this whole technology more mature and better. But we should not regulate or over-regulate only because someone is afraid that crypto is something evil because of a lack of understanding. And this doesn't make sense.
Interesting points. Anything to add from your side? Otherwise, I'm turning towards 2-3 questions from the audience. One person, for example, asked, what about Monero and these privacy coins? Could they be used to bypass sanctions? Because, once again, technically, yes, transparency is lacking, but on the other hand side, you also have crypto exchanges which have to stick to the rules, but maybe not all crypto exchanges are sticking to the rules. What's your opinion here? This is a tricky question, to balance all this.
Can I start?
Yes, please, Alireza, go for it.
Okay, to make it very short, no, Monero is not useful. It looks that it's useful to bypass the sanctions or rules because it is a privacy coin, but you have to look who's accepting Monero. So where can you use Monero? And you cannot really use it on your daily business when you go to the grocery or to a merchant to pay. Plus, all regulated institutions and all VESPs, they are asked by the FATF and by the Anti-Money Laundering Directive to not accept any privacy coins. And this is why Monero is not a useful instrument. But please, anyone else in this round who has an opposite opinion, jump in.
I'm mixed. Technically, you can use it in a way to just make some strange transactions. But again, the market cap of Monero is 3.5 billion. Yeah, that's the price of Abramovich's biggest yacht, maybe. So please, we are talking about a niche.
Anything else to be added by Valentin, for example, or by
maybe I could add, I agree with both points, and to give context, if we look at Russia, we have the average Russian, the rich oligarch, and the state. And again, with this kind of liquidity on Monero, you can't, as a government, touch it because you're going to move the price enormously. You can't use it as a government to avoid sanctions. If you're also a rich person, this would be a too small cap and too risky to end up locked out from some service because you need to convert it to fiat at some point. And the average person could be able to use it to save a couple of $1,000s there, probably, but it wouldn't make sense if you don't have so much to hide as an average Russian. You're better off buying Bitcoin or some stable coin to be sure to have stable value because you don't have much savings left. So I would rather buy a stable coin instead of Monero.
Yeah, I add a little bit of numbers here, like a coin market cap reports that in the last 24 hours in Bitcoin, we had 26 billion US dollars as market volume, but this also includes, a hell lot of arbitrage algorithms and all kinds of trading stuff. So this is not just influx of new money, right? So this is just trading. 26 billion. Why am I saying this? Because with Zcash, we are at 240 million. Yeah, so between Zcash and Bitcoin, there is factor 100. That's exactly what Valentin means. Volatility is just, liquidity is so small that it's difficult to press so much money in Zcash. Just the bandwidth is not there, right? The bandwidth could be there with Bitcoin, but this is basically blocked by larger exchanges. Anything else you would like to mention? Otherwise, we are proceeding. One person, in case somebody is here who is expert on chain analysis, there is one question from the audience, whether, for example, mixers or anonymizers like CoinJoins and other ones have been searched in volume over the last weeks. Anybody has an insight there? I don't, but maybe there's an expert here on anonymizing Bitcoin transactions. Okay, then we are proceeding here even more. Perfect. Okay, I would now in the last section of this panel discussions talk about potential implications for the entire world of finance on a worldwide level. It's very speculative and things need to be sorted out. But we now see these days, for example, that people out there are making up their thoughts. Journalists are making up their thoughts. In Germany, we have a guy called Daniel Stelter. He is economist. He's making up their thoughts. Very interesting. And just mentioning some points, and then you please step in whatever you feel comfortable saying with. For example, we had central banks' money being seized by Western central banks, right? So this should lead to some discussions on behalf of other central banks in the world. You know, there are dozens of central banks, how to potentially diversify or structure their central bank reserves, because seizing is possible in very extreme conditions, right? I think this might, in terms of risk, should lead to some discussions around the world. We also have much money being spent according to gas prices, oil prices rising, but of course also to other spendings which are now occurring. Of course, taxes are not increasing, so therefore, at some point of time, government is basically spending money which it doesn't have, so they will increase debt here, and they now also have a reason to increase the debt. The debt might, again, like with Corona, be purchased by central banks, and then we have the same cycle again as 2 years ago goes with an increasing balance sheet on the central bank. This not necessarily directly transforms into inflation, but it could transform into inflation. So there might be some very severe long-term effects, which we don't really see yet. Anybody wants to add some points here, some remarks, some questions?
Maybe jump in with a comment. I would recommend another article to read. Basically, there's a Credit Suisse analyst, Zoltan Pozsar, who early March put out a paper called Ensuing New Financial Order will benefit Bitcoin. And really talked about how the financial system, to degrees, what we've seen, and it looks effective so far, and some would argue that we weaponize the financial system. The U.S., we have a dollar-based system which has been weaponized to enforce sanctions. And well-intentioned, it may have unintended consequences. In the past, we historically had Bretton Woods, we had a gold-backed currency system. We now have basically a fiat-backed dollar system. And just as you said, when you've seen central banks, or basically say nation states, have had their foreign reserves basically effectively deleted, or let's say confiscated, you realize that fiat money is not necessarily yours. I mean, you've got basically reserves that are liabilities of other financial institutions. It's, as he described, inside money. Inside money. And what he expects basically is there's a risk that if people lose trust in that system, that you can see the rise of outside money, effectively hard assets backing currencies again, whether that's commodities, gold could be a beneficiary gain, Bitcoin could be part of that mix. Where effectively, to your earlier comment about uncensorable money, you need to worry who actually can own your money, and it could be at the retail level as well. Look in Canada, they had trucker protests, and the government was freezing and deleting people's accounts or debanking people without any due course. So it's a slippery slope. I think the implications, this could be longer term viewed, just as 2008 was kind of a genesis event for the crypto space. This could have a similar longer term impact where people who never really thought too much about the fiat system realizes the fiat system is very centralized, very controllable. And maybe there's instances in the future where you have governments that are more oppressive and they control your money. So I think it's a warning sign and basically potentially a big Philipp to the decentralized nature of the money space we're working in.
Yeah, I add one sentence here because if we go back in time, how has money been defined decades ago? At that point of time, people have established a gold standard to basically create credibility to the paper money, right? Paper money is paper, but at that point of time, they had created a gold backing on the paper money such that the paper money gains credibility. Then at some point of time, the gold backing has been removed and replaced by basically credibility of the nations, credibility of governments, credibility of central banks. So it's a self-fulfilling prophecy to some degree, but of course, it doesn't mean that this goes on forever. So in case trust in this fiat money, in the paper money is decreasing, then governments around the world could basically try to gain credibility again by reinstalling some kind of commodity backing, right? That's also what this guy, I also read this article by Postman says, that why potentially such countries are thinking of backing up their currencies with commodities like oil, gas, gold and other commodities, right? To basically gain the credibility again, which might potentially be lost, right? It's very interesting, and it's also very speculative, and it's very far-reaching, and it's basically not possible to clearly define or talk about very clear consequences, right? It's just, as you have said, Seamus, it's just comments and remarks, which also might sound unsubstantiated because it's very, very complex. Any other remarks here by Frank, Valentin? Nobody can predict the future, just collecting remarks.
Yeah, this is like looking at the globe from glass and suggesting what will happen in the future. But I also agree with all the points that we've weaponized the Western system, and this will push authoritarian governments to look at alternatives, to develop their own systems, maybe like in China. And I have the issue with going back to hard assets, especially commodities. But if we turn them into speculative asset, many people will suffer from the inflation and the basic access to energy and other useful services. So this is a very risky move to speculate on the commodity prices, and it will make many people on this planet poor again, I think.
Okay, maybe I can contribute something as well. It's good that we are now talking about crypto not in the context of money laundering, criminal action, sanctions, and so on. Yeah, the reason why I am this space, I'm all in, is because I think it's not speculation. It's just so obvious that it will have a large impact on the way how we transfer wealth in the digital age. And it may sound a little bit provoking, but at the end of the day, all the failure of the existing financial system, we all see this, and that's the reason why we have Bitcoin. And there are so many other reasons for the other coins. So I'm long on Bitcoin because it's my personal big short on the existing financial system. Yeah, I'm not saying that it will destroy and change the financial system completely. That's not the point. But it can heal something in the financial inclusion, for example, more transparency and so on. So, and that's a good thing. And we should focus more on these opportunities in the digital age and in Bitcoin and the other coins and token than talking always only on the big threats. So, the possibility to launder money and finance whatever. So it does not make sense. I'm still thinking about the question before, Philipp, talking about mixers. Yeah, just I don't want to come back to this part of the discussion, but honestly, mixers. Of course, there are mixers. Yeah, but probably if the liquidity of all the money coming to Dubai and big travel bags in cash is higher than all the mixers combined. So let's talk about this.
Yeah, that's an interesting point, Frank, because, actually, there are so many think tanks around the world, many people, and actually we lack numbers saying, okay, these 50 billions are going from this place to this place, and these 10 billion are going there, and an estimation what happens in Dubai is this and that. There are so many arguments out there which are not backed up by numbers, right? That's a general remark, and this makes it very, very difficult to basically steer through all these crises, and same with Corona, right? Any more points raised by you?
No, just a final thing. It's not only about Dubai, to make this very clear. Yeah, I love it. We are talking so much about Dubai. It's not only Dubai.
No, of course, Alireza, I think we discussed it previously. Turkey is a country which is basically also possible to do crypto trades in, Israel and many other countries as well, right? Of course, it's not just Dubai, Singapore, and so on. Yeah, but it's not an easy time to discuss this. Any more remarks by you? Okay, then let me ask a last question. Do you feel that it's a question I will slightly rephrase coming from the audience? Do you think that basically this is also the beginning that, for example, the US dollar, the large scale currencies are getting a little bit weakened? Also, for example, because China is now stepping up and increasing their efforts for trying to create a more higher importance for their own currency. What's your projection there? Will we enter a multi-currency world, where when just one currency like the US dollar is the predominant one, as it was in the last decades, but will we have basically a couple of currencies out there being like jointly the world currency? Does this make sense? Do you believe in this reasoning, or is it not plausible? Or you might not want to comment, because it's even more difficult to project.
I would just expand on what I said earlier. I 100% agree with that. I mean, I think if you look at U.S. Treasuries, they've always been classified as the risk-free asset. I think what we see now, when reserves can be confiscated, is not a risk-free asset anymore. There needs to be some premium there, and that probably means some diversification. I think it means also diversification longer term into, as I said, hard assets. And I think Bitcoin. I agree with Frank. I'm in this space for the same reason. I mean, I think this is, centralized money is not your money. Decentralized money is potentially your money. And it's a huge, huge difference. And we're seeing what the impact is now.
Interesting insight. Any more remarks? Okay, then I would say that we are closing this round. I think it was a very, very dense round. It's not easy to talk about this topic, but we had some very interesting insights from chain analysis, donation, Zcash, and all kinds of other approaches. So thank you very much. We will upload the video also. And out there in the audience, in case you have further questions, then I think everybody here in the room is also happy to receive questions via LinkedIn, via email, or with other means, right? Thanks, and have a nice day.
Thank you. Bye.
Bye-bye. Thank you.